Guys, what if I told you that you can get paid today just for committing to buy a stock that you already like at a discount and with less risk than just buying the stock outright? That is the power of options and selling a put. I'm gonna break it down so easy, anybody can do it in this video. I'm gonna go through 3 examples of really big companies, stocks that aren't probably gonna go out of business tomorrow, super safe. And the best part is you get paid right away. So check it out. I know that everybody watching is in a different scenario, right? Maybe you have a little bit of money, maybe you have a little bit more money, maybe you have a lot of money. So I'm gonna give you 3 examples on one is gonna be kind of like an inexpensive stock, one is gonna be sort of mid-range price, and one is gonna be a more expensive stock. That way I can teach all of you guys, no matter where you are, right? And it's all gonna be super low risk. Now stay tuned and stay tuned to the end because I'm gonna give you really good actionable steps at the end of this video. I'm gonna start with the most expensive stock, and I'm gonna start with, and these are all gonna be good companies, by the way, Amazon. Amazon, who hasn't heard of Amazon, right? They are a monstrous company. Me, I'm always buying stuff on Amazon. I mean, Amazon is amazing. Like, you know, I just buy stuff. It used to come next day. I think now it's 2 days, but it's still a great company, right? Super big, not likely to go out of business, very low risk. If you have mutual funds in like a 401k or something like that, you probably already own Amazon stock and you don't even realize it. This is like skipping the middleman. Why do you need a middleman? You don't need a middleman. You can do this yourself, and it's so easy. Let me explain. So Amazon right now is trading at $221 per share. What if I told you you could buy it at $200 per share? Why would you want to pay sticker price? When you buy a car and you go to the car lot, do you want to pay sticker? Do you want to pay MSRP? No, who wants to do that? I don't know about you, but I don't. I don't want to pay sticker price on my stocks either. So here's an example. Let's say I want to only pay $200 per share. I'm going to sell a $200 put. Now, usually I talk in my videos about 1 week, but I'm going to give you an example on a month. I'm going to give you like just a lot of different things because here's the thing. When you trade options, you are the creator. You choose whatever your comfort level is. You choose the stock, you choose the price that you want to pay, you choose the time frame that you want to be in that commitment for. So I'm going to give you an example. Amazon's 221. I only want to pay 200. I'm going to sell a $200 put that expires on September 19th. That's about a month from now. The price is going for about $100. What that means is $100 gets dropped in my bank account right now, today, when I make the trade. It's not some paper gain that I gotta wait to spend like if I buy stocks. No, that's why this is so much better. $100 gets dropped in my bank account, and what I'm doing is I'm committing to buy 100 shares if the price of Amazon drops below $200 before September 19th in my example. If it doesn't drop, I don't buy the shares, but either way, I get to keep that $100, right? So I'm paid to commit to buy a stock that I like anyway at a price that's cheaper than where it is now, right? And then some of you guys might say, well, how much money, Michelle, do you need to make that trade, right? So let's break that down super easy. And you know what? You don't have to be a math whiz at all. I'm gonna make this so easy for you. Now, I do have trading tools that I'm developing. I use them myself, and I'm developing some new ones for the public. So if you want early access to it, I'm gonna drop a link in this video. It's a link to join my inner circle. And basically what I'm going to do is just send people out an email once they become available for the public. So if you want to do that, sign up below. But if not, you could just use a basic calculator. It's super easy, right? So here's how that works. If I'm committing to buy 100 shares at $200, that's 20 grand, right? If I had to buy the shares. So $200 per share times 100 shares. Why is it 100 shares? Because every time we trade options, it's always in 100 share lots. Now, don't be worried if this sounds confusing. It's kind of like just learning a new thing, right? Like you got to walk before you run, right? It's the same thing. When I was learning how to drive stick shift many years ago, it was so confusing at the beginning. Oh my gosh, I got to like use my right hand and I got to use my right foot and that's the gas, and then I got to use my left foot and that's the clutch, and it was kind of like difficult to put it all together at the beginning. But what happens, like you just practice, and now it's like super easy, like riding a bike. This is the same thing, I promise you. Okay, so getting back to my example on the mathematics, If I had to buy 100 shares, it would be 20 grand. Now, the magic of options also is that if you want to, you can use what's called margin. It's kind of like borrowing some money from the bank, right? It's kind of like if you were to buy a house, most people don't have, $500,000 to go put on a house. They put down a small amount as a deposit or a down payment, and then the bank like floats them the rest, right? This is kind of the same thing. So now margin is a mathematical calculation, and it's going to be different for all stocks, but I'm going to give you kind of like just the basic ideas, just to kind of give you guys the ideas, the fundamentals on how this works. So typically you only have to put up about 25%. What that means is this, and again, I have calculators, but this is not hard math. You could either do it in your head or take out a calculator, right? It's super easy. So if I had to buy 100 shares and it cost 20 grand, and if I want to use margin and use some of the bank's money and not all my money, then I have to put up 25%. What's 25% of 20 grand? It's $5,000. So this is a trade that all you need literally is $5,000. So I have $5,000 in my brokerage account. I sell an Amazon put, a $200 put that expires on September 19th. I'm paid $100 in my bank right now. I get to use that no matter what. I keep that regardless of where the price of the stock goes. And all I'm doing is committing to buy 100 shares if it drops below 200 bucks. And if it doesn't, like I said, I don't buy the shares. So worst case scenario, I'm buying a stock that I like on sale, right? How amazing is that? That's selling a put. It's so easy. It's like, put a comment here if you can see yourself doing that. Okay, that's Amazon. Now, I told you I'm going to go through 3 stocks. Let me go through like a mid-price, because Amazon's $221 per share. And you might be saying, Michelle, I want to start off like baby steps, and that's kind of expensive for me. Let me do a cheaper one. Okay, so let's do a cheaper one. Let's do Disney, right? So who doesn't know Disney? Like, Disney is probably not going to go out of business tomorrow, right? Right now, Disney is trading at about $115 per share. And what do I say? We don't want to ever pay sticker price on a stock. We don't want to pay sticker price on anything generally, right? We always want a deal. Like, who doesn't want a deal? No matter what you buy, you always want a deal, right? Stocks is the same thing. Okay, I want to buy Disney, but I don't want to pay $115. I want to pay $110. So I'm going to sell a $110 put that expires, I'm going to use the same date, expires on September 19th. And right now that contract is trading for 87 bucks. So here's what that means. That means 87 bucks gets dropped into my account right now. I can spend it. It's not a paper gain. It's not like I'm buying some stock and then I got to wait for the price to go up and then I have to sell the stock to actually get the money. Like no, who cares about paper gains, right? Paper gains you cannot spend. You cannot like go have sushi with paper gains. You can't go book a flight from New York to LA. You can't pay your mortgage or your rent with it. You can't go to the grocery store with it. You need cash flow. So options give you cash in your pocket, and it gives you cash right now. Like today. Do you need cash today? This is a way that you could do that. Okay, so Disney, I'm gonna sell a $110 put. What does that mean? That just means I'm committing to buy 100 shares of Disney at $110 per share if it drops below $110 between now and September 19th, right? If it doesn't drop below that price, I don't buy the shares. Either way, I keep the 87 bucks. What do I need to put that trade up? If I don't want to use margin, I need $11,000. Again, you don't need my tools to calculate this stuff. Like, you could just do it in your head or with a calculator. Why do I need 11,000? $110 per share times 100 is 11,000. The magic is, if I want to use some of the bank's money, why would I use all my money when I can use part of the bank's money? It's like OPM, other people's money. That's the best way, right? So if I want to use margin, think of about 25%. 25% on $11,000. Now, I can't do that in my head. What is that? I have this on a spreadsheet behind me. It's $2,750. So what does that mean? That means I have to have $2,750 in my brokerage account to make that trade. Now, worst case scenario, again, Disney goes down. I'm buying 100 shares at $110. It's a stock that I like anyway. Now, let me throw a caveat in here. Some people might say, "Oh my gosh, this sounds so amazing, Michelle. Like, what's the risk? Like, what's the stuff that I got to be concerned about?" Okay, that's fair enough, right? One thing, let's say Disney drops to $100 per share. Well, you might have to buy it at $110. So for a temporary time frame afterward, you might have what we call like an unrealized loss. But here's the thing, guys. You don't lose money ever if you don't sell something for less than what you paid. I'm going to say that again because so many people are just so blinded, and I don't know, they're just like hypnotized by what society ingrains in your brain from a young age. Like, 401k and a job and, my IRA and I'm trading. I have my account with this, financial advisor, right? Everybody's always talking about like these paper gains. Okay, like I have $5,000 in my account and then next month I get my statement, I have $5,500. Oh my gosh, I made money. Who cares? You can't spend that. So that's what I'm talking about. Paper gains, paper losses, or real gains, real losses. You never take a real loss unless you actually sell your shares. So let me go back to my example. Let's say Disney drops, something happens, right? Like Mickey Mouse falls down and the stock goes down. I don't know, right? And it's $100 and you're buying it at 110. It's okay. You just wait until the price comes back up, or you can buy more shares as it goes lower. That's like the Warren Buffett way, right? You buy more as the price goes down and you're averaging down your cost. Now I have other videos that talk about that. But again, in this video, I just want to explain the concept and tell you how easy this can be, right? So you just wait to sell your shares. And it's just a paper loss. Let's say it keeps going down to $90, $95 or whatever. It's a paper loss and you have to wait till it goes back up. But you don't lose your money unless you sell your shares for less than what you paid. Don't do that. That's what suckers do. Let me tell you something. Most of the people in the market when they're trading, most regular people, they lose money. Why? Because they buy when they're euphoric, right? Like prices are high, and everybody's buying. And then when prices drop, they freak out and sell their stuff. Oh my gosh. It's like, that's the dumbest thing that you can do. Don't do that, right? So that's how that works. Now, some of you guys are going to say, okay, I don't have that much money. I don't want to commit like $11,000. I want to start smaller. I told you I was going to give you 3 different stocks, right? I'm going to give you another example, Bank of America. Now, me personally, I don't really trade Bank of America. Bank of America was like the very first stock I was trading when I traded professionally. So I've been trading personally for like 30 years. I started in 1997. That was a super long time ago. Over the years, I traded professionally for a period of time. And Bank of America, and that was back in 2007. And Bank of America was the first stock that I was like pitching, right, to my clients, because the broker dealer I was working at the time was like, oh my gosh, sell Bank of America to everybody. It's amazing, blah, blah, blah. And then 2007, who doesn't remember the credit crisis, right? Bank of America went from $50 per share down to like $2.50 per share. No joke, right? Oh my gosh. So I personally don't trade Bank of America, but it is a solid company. It's probably not going to go out of business tomorrow. I mean, probably not, because look at what happened when the credit crisis happened, and the US is just not going to let banks fail, right? It's just not going to, like, they already proved that they won't let banks fail. So it is super duper unlikely that it's ever going to go bankrupt. So your money's very safe is what I mean. So Bank of America right now is trading at $48.27 per share, right? And let's say I don't want to pay $48, but I want to, let's say I only want to pay $45, right? Because again, we don't buy sticker price. We buy things on sale, always, right? So Bank of America is trading at $48. I want to sell a $45 put. I'm going to use the same expiration date, September 19th. Right now, that contract is going for $35. So not as much, right? Because it's a cheaper stock. And actually, there's a lot of reasons that determine the price of a contract. So first of all, I'm not like picking these prices of the contract, and you don't have to go find a buyer when you want to sell. Basically, you're going to have a platform of who you trade through, but it's very easy. It sounds confusing, and maybe it is at the beginning, but it's super easy, I promise you. And the platform will tell you, okay, this is the price that people are buying. You just enter your trade, and then the money gets dropped in your account. It is like magic, people. So I'm selling a $45 put. The price is $35. $35 gets dropped into my account like magic. I can spend it if I want. What am I committing? I'm committing to buy 100 shares of Bank of America at $45. if it drops to 45 or lower before September 19th. If it doesn't drop to 45 bucks, I don't buy the shares. Either way, I keep the 35 bucks, right? Easy peasy. How much money do I need to make that trade? Well, if I had to put up all the cash and I don't want to use the bank's money, I would have to put up $4,500, right? This is very low risk. It's low risk because it's a low dollar amount and they're not going to go bankrupt, I don't think. Now, listen, I'm not a financial advisor. I'm not telling you what to do with your money. All these videos are free. I'm just trying to help educate you. So many people that I experience on a day-to-day basis are walking around with this 9-to-5 gig that they fucking hate, or they go back to their spouse that they also don't like very much, and they live a life of unhappiness. I'll say it like that. I don't know why. I think society ingrains the wrong things in us, and sometimes we just don't know until we know, right? You don't have to live like that. You can take control of your own destiny. Of course you can. And you can control your own income 100%. And this is how. So let me get back to my example. How much money do I need? You're committing to buy 100 shares at 45 bucks. You need $4,500, right? Not that much money. The good part is, if I want to use the bank's money, I put up 25% of that. So again, I have a spreadsheet because I can do some math in my head, the easy stuff, but not the harder stuff. 25% of $4,500 is $1,125. So if you have $1,125, $1,000, we'll say, if you have $1,000, you can make this trade and you can get paid today. Money dropped in your account. How amazing is that? So we went through 3 easy trades, right? Amazon, super big company. What else did we do? We did Disney, super big company. Bank of America, super big company. I mean, there's tons and tons of companies. So here's what you want to do. You want to figure out, well, what company do you resonate with? Do you like Apple? Like me, I'm an Apple person. I have an iPhone, I have a MacBook. Apple is like super strong. I don't know about now, but they used to say like the line for Apple is like they had more money than the federal government. It's probably still true. So it's not going to go out of business. I mean, you're going to have some volatility in all these stocks, right? You're always going to have that, but that's good for an option seller because you can get paid when it goes up, when it goes down, when it goes sideways. I have other videos that talk more in detail about that. And most of you watching this video, you have probably invested in some shape or form before, like in your 401k. You already have these companies. When you trade options, you are skipping the middleman. You don't need a middleman to trade your money, and you're going to make more money this way. I'm telling you, you get paid right away. You control your own destiny. It's amazing. Like if you have your money with a financial advisor, you're okay, let's just leave it at that. I'm not even going to go there. So I'm going to give you one other example. I'm going to give you an example on Tesla. I know I said I was going to give you 3, but I'm going to give you one more because I don't trade personally. And sometimes I trade Amazon and sometimes I trade Disney. I don't trade Bank of America anymore. Tesla, I trade a lot. Tesla is amazing. Elon Musk is amazing in my view, and it's got a lot of volatility. So the price of the options are determined by a lot of things, and part of that is volatility. So the lower the volatility of a stock, now stay till the end because I'm telling you, I'm giving you good actionable information here. The volatility of a stock, the more volatile it is, the more money you're going to make because it does have a little bit more risk. But again, if you don't sell your shares for less than what you paid, you are never going to take a realized loss. I'm going to say that again. Don't sell something for less than what you paid. If the price goes down, don't freak out. It will go back up. Like a mathematical certainty, I guess, if you will, like kind of like the sky is blue. Where does the stock market go? It goes up. It chops around, but it goes up over time, right? So don't freak out if it goes lower. So Tesla right now is trading at $3.23 per share. So it's a bit more expensive, right? I don't want to pay sticker, right? You never want to pay sticker. And this is good because I'm going through all these examples multiple times. Repetition is the mother of skill, right? It will click. And once it clicks, you have that for the rest of your life. These are skills. Option trading is not that hard. And once you learn how to do it, you will have that for the rest of your life. It is literally like riding a bike, right? So riding a bicycle, who hasn't ridden a bicycle as a kid, right? Like you learn when you're, 5 and you scrape your knee and fall a couple times. But when you get it and it clicks, you fall off your bike now, Heck no. I don't fall off I haven't been on a bike in a while, but I could pick up a bike and I could ride it very comfortably and not be scared to fall. This is the same thing. Once you learn this skill, you will have it forever. Tesla, $323 per share. I don't want to pay sticker. I want to pay $300 per share. I'm going to sell a $300 put that expires on September 19th. I'm going to be consistent and stay with the same date. How much is that going for? Let's take a look. $675. So I like Tesla. I like those kinds of stocks. Why is it more expensive? It's a more expensive. Why is it more premium that you're getting paid? It's a more expensive stock, number one. And number two, it has more volatility. More volatility gets you paid more, right? Ultimately, when you get paid more, your rate of return is higher. So we didn't talk much about rate of return, but your percentage that you're making is much higher. $675 gets dropped into my bank account now. Can I spend it? Heck yeah, I can spend it if I want to. I can go buy whatever I want with it because it's not a stupid paper gain like other people trade. No, we trade for realized gains. We trade for cash flow. So $675 gets dropped in my bank account. What am I committing? I'm committing to buy 100 shares of Tesla at $300 per share if the price of Tesla drops below 300 between now and September 19th. If it doesn't drop below $300 per share, I don't buy the shares. Either way, I keep the $675. Not bad for 1 month, right? Super, super dope. Now, I'm going to tell you also, before I go into rate of return for a moment, how much money do I need to make that trade? Well, if I'm committing to buy 100 shares at $300, it's 30 grand, right? 300 times 100, 30 grand. The power of margin is not needing all the money. You can have the bank float part of that for you. It's about 25% you have to put up. 25% of 30K is $7,500. So I have to have $7,500 typically in my brokerage account, and I can make that trade and get that $675 dropped into my bank account. What's my rate of return? Well, I'm holding it for a month, right? This is a 1 month trade. Today's the 21st of August, and this is September 21 that I'm looking at, or 19, excuse me, September 19th expiration. So I'm holding the trade for a month. So how much am I making? I'm making $675. I'm putting up $7,500. If you do the math on it and annualize it out, I'm making 75% on my money per year, right? Not bad. And the worst case scenario is if Tesla drops, I buy the stock that I like already on sale. I don't know where to go else in this video. It's amazing. Drop a comment in the video in my YouTube here. Can you see yourself doing this? Does it look easy? Is this something that is of interest to you? So many people tell me sometimes, oh my gosh, like somebody just messaged me yesterday, I think. Oh, I retired and I've been wanting to trade options for a long time, but I'm super scared. Number one, first of all, don't have fear. Fear is an irrational emotion. It's just not healthy for you. Fear is just not healthy for your body at all. What are you afraid of? Oh my gosh, you just retired. You had a 401k. You had a 401k at your job, right? And you were already investing in these types of things, but you just don't even realize that. So number one, there's nothing to be afraid of. Number two, all the amazing things happens on the other side of your comfort zone. I'm gonna say that again. All the amazing stuff happens on the other side of your comfort zone. If you keep doing what you've been doing, you're gonna keep getting what you've been getting. Okay, if you like your life, all good. So just keep rolling, keep doing that. But if you want something different, if you think that you would enjoy, let's say an extra $500 a month, an extra, $1,000 a month, an extra $200 a month, whatever that number is, if that's like extra income that would come in handy for you to, I don't know, pay your car payment, or I don't know, go out to dinner a little more frequently, or take a trip to go see somebody that you haven't seen in a while. Use options to do that. Your life is whatever you make it be, and it is not hard, people. I just showed you how easy it can be. Okay, drop a comment in here. Also, I'm gonna put in the link below a link to my inner circle. So my inner circle is free, so I'm not selling anything here. And by the way, I don't make money on these videos at all. Maybe at some point I will, because I've been getting a lot of subscribers. But I just want to see other people successful. Some people I don't know. Some people are different, but me, I like to see people successful. Your success does not minimize my success. So how amazing would it be if everybody's kind of successful, walking around on the streets of New York City, happy, 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 right? It would be a beautiful world. So anyway, that's my intention. So the inner circle, if you subscribe, it's just kind of a way for me to share like new stuff with people. Like I've been spending so much time programming. So right now I have spreadsheets that I use, but I've been developing public facing things like to calculate these types of things that we've been talking about in this video, but to make it just easier for people. So if you're interested in something like that, subscribe for free to my inner circle and I'll let you know when that comes out. Anyway, hope this video is helpful for you. And I think options is amazing. And I think it's like the best thing ever. It allows me to, right now it's like 11 a.m., right? So I'm still in my gym clothes, obviously, as you can see. I went to the gym this morning. I'm just kind of sitting at my table here. You can see my view out. I'm like way high up on the 70th floor of this high-rise, beautiful building overlooking the river in New York City here. And I'm not saying that to brag, but I'm saying like if you want to change your life, you can absolutely do that with options, because that's the only way I make money right now is from trading. And then I just spend all my time doing this programming stuff because it's super, super interesting to me. Anyway, I've been talking enough. Yesterday I did a video on Bitcoin and a friend of mine watched it and he was like, Michelle, you were like reading off a script. And I had like ChatGPT like kind of create this thing. I don't know, I just wanted to do something different and he said he didn't like it. So this is more kind of like I'm just talking to you. I paused it a couple times just to like gather my thoughts. But anyway, I don't edit these videos or anything. Anyway, I'm done talking. I hope that helps. Happy trading.